Welcome to another S&P 500 Trade Watch analysis. Today is August 17, 2022. Today, the latest FOMC meeting minute was released, and as usual, that stirred up some volatility in the market. In this video, we'll take a closer look at the S&P 500 ETF, the SPY, and see where it is heading. Stay tuned. Before I begin, I have an announcement to make. Earlier this week, I have started posting on Substack, a newsletter posting site. I have made a couple of posts to follow up on a price scenario I put forth in my Sunday Trade Watch video. So go check it out. The link is smtraderCA.substack.com. I will put this link in the description below. One more short business to take care of before we begin. If you like the contents in this video, be sure to click the thumbs up to give it a like, and this will help promote this video on YouTube. And if you have not subscribed to this channel, click the subscribe and the notification icon. As always, if you have any question or comment, please post them in the comment section below. Yeah, my voice kind of sounds hoarse today, so hopefully it will be clear enough for you to make out what I'm trying to say. So bear with me. Now let's start with this intraday chart of the market internal and the sentiment. Here you can see that the S&P 500 open gap down and the up-down volume ratio started out negative. In other words, more down volume than up volume. Also, the declining issue outnumbered the advancing issue by almost 2,000. 2,000 or more declining stock than advancing stock. Just a reminder, there are over 3,000 stock traded in the New York Stock Exchange. So to have 2,000 or more declining stock than advancing stock, that's just like 80% of the stock traded in the New York Stock Exchange are down. Now, not much to see on this new high, new low, the new 52-week high versus 52-week low. At most, the 52-week low lead the 52-week high by 11 issue throughout the entire trading session. And it ended the day only leading by 1. And the VIX been sitting at this 20 level, just kind of hovering between above 20 and under 20. And the market participants are neither fearful or complacent. But the interesting thing is the put-call ratio is above 0.75. So even though the market participant might not be fearful, but they are certainly putting on some hedges just to protect some potential downside or some surprising downside to come. And on this set of chart, here we see the up-down volume started the decline shortly after the open. Only after the FOMC minute was released, we saw a little bit of a pause of the down volume continue to build. And after that little pause, we saw the down volume continue to accumulate throughout the remaining of the session. And here on this tick chart here, you can see that most of the trade that was taken throughout the trading session was on a down tick because it's below zero. And most of them is between this zone, between 500, minus 500 and minus 1,000. And those are the level, the range where a lot of the institution sell program kicks off. And also notice the cumulative tick, it also been negative all session long, and just get lower and lower throughout the session. And on this chart of the ES, the E-mini S&P 500 future, it opened in range but out of value. Then it traded briefly inside of the yesterday's value area, and then proceeded back down to test the overnight low, and then took out the overnight low, do a little bit of a shakeout while the European market is closing. And then after it's closed at noon hour, it came back up, and throughout the afternoon, it just kind of sit there until, sit right at the edge or near the value area low, prior session value area low, until the Fed minute came out, the FOMC minute came out. Then we got this fake rally moving all the way up to yesterday point of control. Then that's sort of exhausted. And you can see when you see a reversal at these key level, that this entire move is more of the STF, the short time framer. In other words, mostly the day trader, intraday trader that trade pretty closely to these technical level. Right? And then you can see that as soon as it hit this VPOC, yesterday point of control, it just reversed back and came back down to the near the yesterday value area, and basically kind of closed near the level that caused the SPY, the SPY, to pin at 427 on today's OPEX. Today is Wednesday, so there is a option expiration on Wednesday, and they basically pinned it at 427. Now let's take a look at this daily chart I have posted in my recent Substack post titled it Going Back to Balance. In this post, I explain what I mean by going back to balance. I will put the link to this post in the description below, so go check it out after you have finished watching this video. Now I have boxed in this last 3 days of trading here, and there could be some sort of balancing taking place. And if I switch this chart to a 30-minute period chart here, you can see how the price sort of fluctuating within this range here. So, so that does appear to be some balancing here. In order for the price to come down to this balance area here, it has to go from an imbalance, which is here, making a move up, and then have to hit a balance area, do some little bit, no matter how short it is, at least some balance before it move into another imbalance step, then to a balance. Because during the auction process, you always go from balance to imbalance, and then from imbalance to balance, and then just keep this sequence going. You cannot go imbalance, imbalance, and then balance, or balance, balance, imbalance. So that's why I'm looking for some sort of a balancing here before it go into another imbalance, and looking for the imbalance to lead it down, to lead the price down to this lower range of the weekly expected move between 420 and 417 and 50, then eventually come down to this this zone here, then start doing some balancing. And it happened to be at the same range as the previous balance area, and also the balance area at the early part of June. Now, the reason why it has a tendency to go back to the prior balance area is that those prior balance area have demonstrated there are a lot of acceptance in those price range, and there's a lot of seller and buyer, and that indicate there's a lot of liquidity. So, the price tend to move toward the area of high liquidity. Now, doesn't mean that it always go back to the prior balance area. It's just that it has a high probability it will stay there and do some balancing. Now, there could be things that have changed. Then it will go and look for a different area where it has high volume or have displayed, prior the time that has a lot of traded volume there at those price level, and those could become the next balance area. So if it doesn't sit here and balance, it could come down here and start balancing in this area here where there is a lot of traded volume here. So it could be balancing down here between 396 and 388 or so, instead of looking at somewhere around 416 to 408, 409 area for the next balance. So that's basically what I'm looking for, is for the balance to take place here, maybe after a little bit more tomorrow and today, or this is it, for today, and then start breaking down and come down toward this 420, 417, and maybe it will find some area near this these level here for the Friday option expiration pin number. Now, it could also pop around here and then move up again, move up to this upper range of the expected move, somewhere around the 335 level, and then come into this potential balance area up here between the 436 and 440, 448. So that's another possibility. But right now, I'm basically looking for more of a play coming back down because of this potential resistance here, and also it's been up quite a long period of time. So it needs to come down and do a little bit of a balancing to consolidate the recent gain. And that's basically what I said on the weekend video as well. So that's basically what I'm looking for right now. And that's it for today's video. I hope you find it useful, and be sure to go check out the post and also my my Substack channel. So be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.